What is going on, everybody? It's your boy Nye, and welcome to another episode of the What is Crypto podcast. Today, I'm sitting down with Adam from Digitex. Now, Adam has an extensive background in trading and has created a trading platform called Digitex that focuses specifically on futures and leverage trading. So in this episode, we sit down to discuss what is futures trading, what is leverage trading, and all the details about how it works on the back end. We dive into the minute details of what is a futures contract, what is leverage trading, how does leverage even work, and we dive into the basic understandings of this for people who are unaware of how this works and how this functions. Now, first off, I want to say this is not financial advice. We're not financial advisors. This is for entertainment and education purposes only. And also be very aware and be very safe when you are trading with leverage on any platform. This is a skill for a person and a trader with more experience. If you are a beginner, I do not recommend you trade on leverage in any way, shape, or form. Lastly, guys, if you have any questions about this episode or any other episode, you can ask us on Facebook or on Twitter, and you can find all of those links at whatiscrypto.com. Let's get into the episode. So we've talked a little bit about trading in different episodes, but can you give us a basic overview of just trading in general? We'll start with cryptocurrency trading, and then we'll dive into the different aspects of futures trading and all those different things.
I would describe cryptocurrency trading as the trading of cryptocurrency tokens between, one party to another on a cryptocurrency exchange, which is a place on the internet where people register and deposit tokens, and then they swap those tokens between themselves at prices agreed upon by themselves. The exchange acts as a middleman, basically just, guaranteeing that everybody pays. But then there is the case of the decentralized exchanges, decentralized cryptocurrency exchanges, where people can trade tokens between themselves without having to trust the exchange. The problem with those exchanges is they can only move at the speed of the blockchain right now, which can be relatively slow. So decentralized cryptocurrency exchanges don't have much liquidity because market makers can't come in there and act quickly. So decentralized cryptocurrency exchanges are safer for your tokens, but are usually much less liquid. The centralized cryptocurrency exchanges, you have to trust the exchange with your tokens, but in return, they are much more liquid, and you'll get better prices, and it's easier to get filled on the trades that you want to do.
Perfect. That is a great definition. I love it. Now, diving into the different types of trading, right? We have normal trading where we have, exactly like you explained, you have a buyer, you have a seller on the exchange, and the exchange just is supposed to act as an intermediary. And then we have futures trading, which is where you guys are very heavily focused and what your skill set is. What is trading futures, and how does it even work?
Trading futures differs from trading the underlying instrument in that when you're trading futures, you're not actually buying and selling the underlying instrument. What you're buying and selling is the promise to buy or sell the underlying instrument at a fixed date in the future. And that's why they're called futures, because all you're doing is buying and selling promises. And in futures trading terminology, those promises are called contracts. So at a fixed date in the future is when we're going to make this trade, but we agree upon the price now. Now, the advantage of that, there's several advantages to that. Firstly, if we're not buying and selling the actual thing, then we don't have to keep swapping it between us. All we're doing is trading promises, and it's very easy and quick to, send promises back and forwards between each other. The other advantage is you can put a lot less of the value down. The value of the underlying instrument, you don't have to put that full value down to buy a futures contract. You can just put 10% or even 1% of the value down. You can just put a small fraction of the value down instead of the full value. So that's basically leverage. So you can trade a high value asset with only 10% or 5% or even 1% of the value of that asset. And I guess another good advantage of futures trading is the ability to go short. With futures, you can sell things that you don't own because, again, you don't have to make good on that promise until the fixed date in the future that we're trading on. So you can sell something you don't own at a price you agree on now, with the idea of if the price drops, you can buy it back later on and cover your position and make yourself flat. So there's those real key features of futures trading in that you can buy and sell things that you don't have the full value of, with a fraction of the money, and you can sell things that you don't even own.
Awesome. That's a really good definition. That's also a lot, so I kind of want to break it down a little bit. If someone has never heard of leverage, like how does it work? How can you trade? For example, I have 0.1 Bitcoin and I want to trade that, but I can also trade all the way up to a Bitcoin or 10 Bitcoin. How does that work on a futures exchange? How is this possible?
So basically, leverage is what we're doing is when we're trading futures, we're saying, right, you want to buy 1 Bitcoin. Now, the chances are Bitcoin isn't going to go down to zero. Chances are, while we're trading, the price of Bitcoin might only fluctuate by 1 or 2%. And because we're not trading the actual Bitcoin between ourselves, we're just trading the promises to buy or sell the Bitcoin. All we have to do is put down the amount of money that we might potentially lose. We don't have to put down the full value of the Bitcoin. We just have to put down the amount of money that I might end up owing you or you might end up owing me. So that allows us to trade with, instead of needing the 1 Bitcoin, I might only actually need 0.01 of the Bitcoin to cover my potential losses. And that's leverage. So basically, I'm buying and selling a Bitcoin and getting the corresponding profits and losses associated with that Bitcoin, but with a fraction of the value of that Bitcoin. And what it does is it amplifies, it magnifies the magnitude of my profits and losses, because now I've got the profits and losses associated with 1 Bitcoin, but as they relate to the 0.1 Bitcoin that you were talking about. So the profits and losses are much bigger compared to the amount of money that you're putting in. That's what leverage basically does. It's just amplifying your buying and selling power.
Awesome. That explains it really well. And for the definition of shorting, when someone shorts a market, specifically like the Bitcoin market, what does that mean? And then I've got a couple other questions about that. But what does that specifically mean when you say you can come in and you can short the Bitcoin market?
Sure. So if you think the price of Bitcoin is going to go down, then what you can do is you can sell it short, even though you don't own Bitcoin. You've got 0 Bitcoin right now. If you think the price of Bitcoin is going down, you can sell Bitcoin futures at the current price. And if the price of Bitcoin goes down from here, then you can buy back the Bitcoin that you've sold at any time to make yourself flat. So basically, you're able to sell something you don't own because it's a futures contract. You don't have to deliver on that until this set date in the future. So until that set date in the future, you can sell it short, and you've got the time to buy it back at a lower price later on. So you can sell it at 7,500, and then later on you can buy it back at 7,300. So if the price went down, you can make money when the price goes down. The flip side to that is you do need to cover that position at some point. So if you sell it at 7,500 and then the price goes up and up and up, at some point you're going to have to buy it back. So if you have to buy it back at 8,000, then you've lost money. But short selling is the ability to make money when the price of an asset is dropping.
I want to give a shout out to one of our sponsors, AAX. AAX is a futures trading exchange that has more than your average capabilities. They allow you to do spot, futures, and OTC for low fees on a highly secured trading platform. Highly qualified team that is focused on creating the world's best financial technologies and tools to allow for digital assets to be traded with simplicity and ease. AAX is one of the world's first digital asset exchanges powered by the LSEG. And the LSEG is the London Stock Exchange Group. Leveraging the LSEG's proven and robust and scalable technology, AAX provides institutional-grade exchange performance and reliability. You guys can learn more at AAX.com. I want to give a shout out to our sponsor, and our sponsor is UnityCoin, the world's first stablecoin diversified to provide you with financial freedom and help the world via giving back through charity donations. The UnityCoin is a stablecoin pegged to a diversified index of assets for financial security against a volatile market. While national currencies are inflationary and cryptocurrencies can be volatile, growth and stability come from automated diversification. UnityCoin aims at giving and delivering this automated diversification on a daily basis. One of the really cool things about Unity is it's a non-profit organization. All revenue after costs are donated to vetted projects. This company is really focused on using cryptocurrency and using their business model to give back to the community and beyond. And what's even cooler is that if you hold UnityCoin, you can have a vote on where that money is donated. You can go over to unity.sg to download their wallet, to look at historical data, and to become involved in the Unity project.
And when you're doing this short selling, how does this affect the overall market of Bitcoin and cryptocurrency? If a bunch of people are short, they're technically betting against Bitcoin. And am I correct about that?
Yes. Yeah. There can be negative effects. If there's a lot of people that are selling short on the futures market, then those people are incentivized for that, to want that price to go down. So, there is an incentive for them to go onto the cryptocurrency exchanges and try and manipulate the price down. Maybe they'll just start selling real Bitcoins to smash the price down so that they can make money on their futures position. So when the futures markets get very, very busy, it's kind of a tail wagging the dog scenario where the futures price that is supposed to follow the price of the underlying instrument, it flips around. The underlying instrument ends up following the futures price. So there are some dangers in short selling, but it's one of those things with derivatives trading. People will act in their own self-interest. So giving people the ability to short sell does incentivize them to want the price to go down. Whether they can effectively manipulate that price down is another matter.
Totally. I mean, it can be said that not even just in the futures trading market, but in all trading markets, it's all about the incentives of the individual and whatever position they have, whether they're long or short or just holding.
Yeah, but I mean, it doesn't mean you shouldn't give people the ability to take that position. If someone's long, then they're incentivized to try and make the price go up, and that can also be done in a manipulative fashion that isn't true of what's actually going on. So, the people, whenever there's people involved, there'll always be a fiddle somewhere. But, you can't just not allow them to take those positions because potentially they may try to manipulate the market to fulfill those positions. That's just one of those things. I think the more liquid the markets are, the better, because that it just makes it harder to manipulate. When there's liquid markets, they are harder to manipulate.
Yeah, and I think what you guys are doing is you're providing a product for somewhere where there's a need. There's obviously been an evident need of future trading platforms and exchanges and things like that, which is what you guys are providing. And even feeding off of that, as someone you're doing this all the day. I'm not necessarily a trader. I've traded in the past, but I'm not necessarily like a full-time person. One of my roommates is a full-time trader, and he spends hours a day doing this kind of stuff. As someone who does this all the time, what's your position on experience and skill needed to even begin looking at things like futures and leverage trading and things like that? Do you think this is something that's safe for beginners, or do you think it's something that people should take their time with and learn about and study before they go really heavy into this sort of a market?
the best way to learn, I mean, trading is a game where you're making and losing money. The best way to learn anything is through, getting it wrong and through pain. Pain is the best teacher of them all. And unfortunately, with trading, the only way you're really going to learn, the only way those lessons are really going to sink in is if you lose money. And that's the unfortunate part about it. You've just got to trade with an amount of money that isn't going to ruin your life. But when you start trading, you should fully expect and really not even be that worried if, you get it wrong when you first start. Of course you're going to get it. What have you ever done and you've just been good at it from day one? Nothing. It's just not going to happen. And trading is the same. And you are going to lose. You are going to mess it up. You're going to get it right sometimes. You're going to get it probably wrong more than you get it right. That's not something you should be afraid of. It's something that you should get into as fast as possible. Just do small size. Don't play with money that you can't afford to lose. But jump in there with both feet and experience what's going on. Experience the ups, experience the downs. There's no free lessons in anything. Trading is the same as everything else. I wouldn't be afraid of losing. When you're getting involved in trading, don't be afraid of getting it wrong. It's just one of those things. Until you've got it wrong, you're really not going to have the experience that you need. Experience in trading is knowing what it feels like to completely get blown out, because guess what? You won't do that again. So it's really not as bad as people make out. You might lose all your money. Just trade with a small amount of money, and yeah, you might lose all your money. It's one of those things. You're jumping into the lion's den. You've got to be prepared.
Can you share a little bit about what makes your exchange different than other exchanges out there in the market right now?
Sure. The Digitex Futures Exchange is totally unique from any other exchange out there because, well, there's a couple of reasons. We've got our own native currency, which is the Digitex token. That's the native currency of the exchange in which all account balances are denominated in. And the reason we have that is because we are a zero fee futures exchange. There's no trading fees of any kind on any trades. So you can buy and sell to your heart's content. You won't get killed by commissions like you do on every other exchange out there. And the way we can do that is because we do have our own native currency. By making, the use of the currency, the Digitex token, compulsory on the platform, you have to have it in order to trade. That creates demand for that token amongst traders. Traders that are attracted to highly liquid futures markets with no trading costs whatsoever do need to buy the Digitex token in order to participate. And that demand helps us to, we have a treasury of Digitex tokens and we can sell Digitex tokens to the traders as they come in. And that is our revenue model instead of transaction fees. So we are quite a unique futures exchange in that there's just no trading costs of any kind on any trades.
Where are you in the stages of your exchange right now? Are you guys live, functioning, have users on the platform? Is this something that's coming out in the future? What's the status update?
Yeah, we have real users on the platform now. We launched our testnet on Saturday, like a few days ago. We launched the long-awaited testnet. So that's we've just got one market running right now, the Bitcoin USD futures market. We've got active market makers on there. It's really busy. It's looking really, really good. We've got real traders on there. We've already had over 5,000 active traders signed up. It's the test net, so it's fake Digitex tokens right now. You when you sign up, you automatically get a balance of 100,000 fake Digitex tokens, and you can trade away and practice and do all the mistakes you want to make because it's just play money, and you can just get some more anytime you want. So right now we're in the testnet phase, and we're working up to just getting all the bugs out, the little bugs that we've got, all the different things, improvements we want to do, and we're hoping to go to mainnet in 2 or 3 months, where that's when it will become a real money exchange.
That is awesome, man. Really cool stuff. I'm glad that we had time to jump on the show and jump on the podcast. For everyone that's interested, go check out the Digitex exchange. Where can they learn about it, Adam? What's the website? What's the best and easiest way for people to dive in and learn about Digitex?
Yeah, go along to our website, digitexfutures.com. We've got a bunch of stuff on there. You can sign up to our exchange right away, start trading right away with a unique ladder trading interface. It's a one-click ladder trading interface built for very short-term scalpers, short-term traders. It's a real nice interface to use. We've got a really active Telegram group. We've got like 50,000 people in our Telegram group. We're often one of the busiest, most engaged Telegram groups on the internet. We're all over social too. But yeah, I would just say go to our website, digitexfutures.com, and learn more there.
Awesome, man. Well, glad to have you on the show. I appreciate you taking the time to join us.
Excellent. Thanks for having me. I really appreciate it.
All right, guys, that was a really good episode. We sat down and we discussed what futures are, how leverage trading works, and I think that Adam gave some really good descriptions. I really like the overall message that Adam brought, especially the part where we dive into what leverage trading is. The definitions were very crisp and well defined. He did a really good job on this podcast, and I had a lot of fun with Adam on the show today. Today's homework in the DYOR section is to do a little bit more research on leverage trading. I want you to read an article about leverage trading and dive into the dynamics of how it works a little bit deeper. And if you have the capacity to trade on a leverage platform, aka if it's legal in your registered area, go ahead and sign up for one. Again, I'm not a financial advisor. I am not here to give you financial advice. This is for education and entertainment purposes only. So I'm not advising you to go trading immediately or anything like that. I just want you to understand what leverage trading is, and if it fits you, you can make your own decision whether you want to trade on these platforms or not. Finally, guys, please leave us a review on iTunes. Please hit us with a 5-star rating, comment, review, all that good stuff. It means the world to us, and we'll catch you in the next episode. Peace.